Many financial films, when watched through the lens of a financial expert, are, shall we say, not brilliantly researched. If you've watched videos here on YouTube of experts reviewing films in their fields, you'll know that Hollywood doesn't have the best track records when it comes to representing complex material. This could have ranged from doctors to lawyers to magicians to almost anything you can think of. Thankfully, 2011's Margin Call is an exception to this rule. Written and directed by J.C. Chandler, the son of an investment banker himself, it shows a very good level of understanding of the subject matter. In this film, themes are generally well covered and the sets and dialogues are next to faultless. The haircuts, suits, personalities, faces are all well observed, and we feel like we've met these people many times before in our careers. Unfortunately, the necessary trade-off for this level of depth is inaccessibility. The film is steeped in financial terminology that can be quite off-putting to people who haven't heard any of these terms before.
375 mil, 30-year mix.
MBS products. No swaps.
Levels of volatility.
Rating classification.
Historic patterns.
The film does try to clarify some of this, and we'll be explaining more as we go through to give you a little bit of an insight from an insider's perspective. The film takes place over a 24-hour period during the early stages of the 2008 subprime mortgage crisis, in the office of an investment banking firm. Said subprime crisis was a major contributor to the subsequent global financial meltdown of 2008. At its heart, the mortgage crisis was about poor quality borrowers defaulting on their mortgages. These mortgages were largely missold to them, foregoing standards checks like a verified income source. Although the film is not based directly on what happened at Lehman Brothers, the spectre of the staff of Lehman carting their personal effects out of the office on the day the bank went bust remains one of the defining images of the era. The opening of the movie covers the preemptive sacking of a large contingent of the bank's traders. One employee of 19 years is unceremoniously fired with absolutely no warnings.
Cutting
We hope you
jobs.
understand this is in no way personal. The majority of this floor is being let go today.
This episode is very well observed and true to life. The ruthless, brutal attitude and actions of the HR hatchet women are perfectly portrayed. Long-serving members of staff are literally escorted from the building with customary cardboard boxes full of personal trinkets. Passkeys and mobile phones have been deactivated. On his way out of the door, one of the senior traders hands his surviving junior assistant a pen drive with some analysis of the bank's current risk position. The young analyst, who is literally a rocket scientist,
So you're a rocket scientist?
works on the data and discovers that the assumptions the bank is using in its risk modelling are flawed, and the bank has already broken through its risk parameters, and if nothing is done, catastrophe awaits. Veterans can skip over this part, but here's a few key terms to know. The bank is trading in mortgage-backed securities, which are formed by pulling together hundreds of mortgages into one fund, thus theoretically reducing the risk in owning these mortgages in the same way that a diverse portfolio of stocks reduces the risk of investment in equities. They discuss the VAR of the firm, and not the horrible VAR we're all used to from football, but rather the value at risk, which is a way to quantify the risk of potential losses for a firm of an investment. Leverage in a banking sense refers to using debt to amplify your returns from investment. By borrowing money on top of your own cash, you can exponentially increase profits, but this also works in the other direction, and you can be wiped out really quickly if investments fall in value. Now, the last thing before we put this all together is volatility, which is simply a measure of how rapidly and by what magnitude the price of a security moves. In the film, the firm's position is far more volatile than their model had calculated, and they're heavily leveraged, giving them a huge value at risk, or VAR.
It is these VAR numbers that are setting this thing off.
Excuse me.
A high value at risk is kind of fine, so long as the assets are not very volatile. But in this case, the assets are hugely volatile. They're very susceptible to falling because, as it turns out, the mortgage-backed securities were nowhere near as solid as the ratings agencies and math wizards had claimed. So the bank realizes that these mortgages, as we explained at the start, that would go on to default, were far less valuable than anyone had previously thought, and in reality, most of the bank's assets were highly, highly toxic.
Well, the losses are greater than the current value of the company.
All of this in combination is why the bank's risk models are so very wrong, and why everybody is beginning to panic. This is the pivotal moment of the film, as everything after this is a reaction to this revelation. The characters suddenly had the weight of the world dropped on their shoulders and are worried about their jobs, the politicking in the firm, and the potential collapse of global markets.
Look at these people. Wandering around with absolutely no idea what's about to happen.
This instantly shatters any feeling of security for everyone involved, akin to finding a grenade in your fridge. As much as we do admire the film, there are some lowlights. One of the most obvious being a scene where a young investment banker very oddly disparages his own job.
I push numbers around on a computer screen. Bunch of glorified crack addicts, really. They take that information, they pretend to understand it, and they bet it against some other jock halfway around the world who, you know, if he wasn't doing this, he'd be at an OTB somewhere, putting it all on number 7, you know, so
This is a very Hollywoody scene. The character here is not speaking as they realistically would, but rather as an obvious mouthpiece for the writer. We don't believe that anyone in real life would speak this way about their own job. If anything, more realistically, we think people in these jobs would probably be moaning that they should be paid more. The film builds to the scene where all the senior members, including the CEO who gets flown in by helicopter, are gathering to decide what to do next. One line from the scene that initially comes off as a little bit Hollywood cheap gag, but is actually quite subtly clever, is the CEO pretending to understand less than he really does.
Speak as you might to a young child or a golden retriever. It wasn't brains that got me here, I can assure you of that.
It's quietly implied throughout the film, becomes more clear in later scenes, that the higher-ups of the bank really did have a good idea of what was going on, but didn't really feel like sacrificing the massive revenue streams that they were receiving.
Of course, you're well aware that I filtered several warnings to you and Cohen about this a year ago.
I mean, the numbers, they just don't add up anymore.
I agree with you there. I've been saying that for years.
So despite his nearly buffoonish initial appearance, it's shown that the CEO really is no fool here.
I'm here for one reason and one reason alone. I'm here to guess what the music might do a week, a month, a year from now. And standing here tonight, I'm afraid that I don't hear a thing.
The said CEO quotes an allegedly famous adage in investment banking.
There are 3 ways to make a living in this business. Be first, be smarter, or cheat. No, I don't cheat.
Well, the firm decides to do a combination of options 1 and 3. They're the first to move these toxic assets onto anyone who will buy them, and despite the CEO claiming he doesn't cheat, they do, because they know they are selling worthless assets.
You will never sell anything to any of those people ever again.
I understand.
Do you?
Do you? This is it! I'm telling you, this is it!
The next day, they sell off these toxic securities for any price they can get. Targeted buyers include rival banks, brokers, middlemen, and most shockingly of all, the bank's own clients.
I want you to hit every bite you can find. Dealers, brokers, clients, your mother if she's buying.
The front office participants in this fire sale realize that they're signing over their career's death warrants.
Some of you will be repositioned within the firm.
Does this worry the senior management of the bank? Of course not. They simply offer their staff financial incentives to sell over 93% of their assets in one day.
If you achieve a 93% sale of your assets, you will receive a $1.4 million one-off bonus.
The subsequent fire sale pitches to clients are very realistic representations of how actual sales conversations happen.
Trading.
Hello, gorgeous.
Will, what's happening over there?
Well, today's moving day.
What are you guys so worked up about?
You think they tell me anything? All I know is that today my loss is your gain. Now, you're a friendly, so I come to you first. I got 270 mil, 15-year paying out a 1.5 above par.
Where's it from?
Where's it from? Do you care?
No, not really. Now, where's the trade? I'm hearing things
Alexis,
and you guys are scaring
I'm only
me
sharing this with you right now. 85.
Done.
For example, the character from the firm shown on the phone is a convincing salesman, and the people he's talking to clearly trust him. There's also an implicit element of my word is my bond, the long-standing motto of the London Stock Exchange. It's understood that when you're dealing in the markets, when you agree on the phone, that's it. The deal is closed, there's no reneging, and this is true here even in unprecedented circumstances.
Get him to 65 and hit it.
Are you fucking kidding me? What is that? That's a $131 million loss on a single trade.
I understand. Hit it.
And the last key scene for our purposes is set in the executive dining room, where the higher-ups of the bank are deciding what they're going to do after this crisis.
Do you know, I'm starting to feel a little better about this whole thing. So you think we might have put a few people out of business today? That's all for naught. But you've been doing that every day for almost 40 years, Sam. It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat. And it's certainly no different today than it's ever been. 1637, 1797, 1819, 37, 57, 84. It's all just the same thing over and over. We can't help ourselves.
So have you ever had any delusions about how the big investment banks have their clients' best wishes at heart? Rid yourself of them immediately. In fact, the moral of the movie is the steps the bank would subsequently take in order to avoid this outcome, selling to everybody, shortcutting every possible corner, even at the cost of its own employees and clients. Now, this portrays a terrible day for many in the markets, but in all honesty, it was a great day for patient investors because prices collapsed. Long-term investors in great companies were able to pick them up for almost comical discounts, somewhat similar to the 1987 Black Monday. An interesting question to ask is whether there's a parallel in today's world. From our point of view, we're sitting and thinking, when's the crypto crash going to happen? Not to mention the potential housing market bubbles in the UK and US, and even a pretty highly valued stock market. I'm just hoping we get this video out before one of these crashes happen. Now, we believe that Margin Call, in conjunction with another film, The Big Short, offer a pretty good summation of what happened during the 2008 crisis, and also exactly who didn't get punished. The Big Short gives perhaps a more rounded view of this, whereas Margin Call focuses more on the fallout of one firm in particular. Both films are admirable in their own ways, and we recommend watching both of them. Now, we're also going to be doing a review of The Big Short on this channel, so if you'd like to watch that, please do like and subscribe and follow along. Hey, it might already be out for you if you're watching at a later date. With all that, this is our review. We hope you enjoyed it, and we'll see you in the next one.